Let me ask you something, and I want you to really think about this before you answer. What if everything you were taught about keeping your money safe is actually the very thing that's slowly making you poorer? What if the place you trust the most with your hard-earned cash, your bank, is quietly working against your financial future? I know that sounds dramatic. I know it sounds like something you'd hear from a guy in a tinfoil hat on the internet. But stay with me here, because by the end of this video, you're going to see your relationship with money completely differently, and you're going to understand why some of the wealthiest people on the planet keep as little cash in the bank as humanly possible. I'm not here to talk about crash diets or detox smoothies today, because here's the thing about health that nobody in the wellness industry wants to admit. Financial stress is one of the deadliest things you can put in your body. It raises cortisol. It destroys sleep. It tanks your immune system. And it keeps you in a permanent state of low-grade anxiety that no amount of kale or cold showers can fix. So yes, we're talking about money today, because money is health. And if you want to live well, you need to understand both. So let's get into it. The bank. We've been told since we were kids to save our money in the bank. It's safe. It's responsible. It's what adults do. And look, I'm not saying pull every dollar out tomorrow and stuff it under your mattress. Banks serve a purpose. But here's the cold, hard reality. When you leave your cash sitting in a standard savings account, inflation is eating it alive. Right now, inflation is running at a rate that makes most bank interest rates look like a bad joke. You're getting maybe 1, 2, 3% interest if you're lucky, while the cost of groceries, rent, gas, and everything else you actually need climbs higher and higher. You are losing money in real terms while thinking you're being responsible. That's the trap. And today I'm going to give you 6 assets that do a better job of protecting and growing your wealth than cash sitting in a bank account ever will. The first one is real estate. And before you say, I can't afford property, just hear me out, because this has changed dramatically. Owning physical property has been one of the oldest and most reliable wealth-building tools in human history. Why? Because land is finite. They're not making more of it. And in the long run, real estate tends to appreciate in value, meaning your asset gets more valuable over time, unlike cash, which gets less valuable due to inflation. On top of that, if you rent out the property, you're generating monthly cash flow. Money that comes in whether you work that day or not. Now, if buying an entire property feels out of reach, this is where REITs come in. Real estate investment trusts. These are companies that own income-producing real estate, and you can invest in them through a brokerage account just like you'd buy a stock. You get exposure to real estate markets without needing a massive down payment or becoming a landlord. The point is, bricks and mortar have a track record that stretches back centuries. Cash in a savings account has a track record of quietly disappearing. The second asset is index funds, and this one genuinely changed my perspective on long-term wealth. An index fund is essentially a basket of stocks that tracks a market index, like the S&P 500, which includes 500 of the largest companies in America. Instead of trying to pick individual winning stocks, which even professional fund managers fail at most of the time, you're investing in the overall market. And historically, the stock market has returned an average of about 7 to 10% per year when adjusted for inflation. Compare that to your bank account. The math here is not even close. Now yes, the market goes up and down. There will be scary years, there will be dips and corrections, and your account balance will do things that make your stomach drop. But if you zoom out over 10, 20, 30 years, the direction has always been up. The key is consistency. You invest regularly, you don't panic sell when the market drops, and you let compound interest do its work. This is boring investing. This is unglamorous, patient, disciplined wealth building. and it absolutely destroys what a savings account can offer you. The third asset is gold and precious metals. And this one has a deeply human quality to it that I find fascinating. Gold has been considered valuable for literally thousands of years across every civilization on Earth. That's not a coincidence. There is something about precious metals that holds up even when governments collapse, currencies fail, and economies burn. When inflation spikes or a financial crisis hits, gold tends to hold its value or even increase. It's what people call a store of value. Now, I'm not saying put everything into gold bars you bury in your backyard, but having a portion of your wealth in gold, whether that's physical gold, gold ETFs, or gold-backed assets, acts as a kind of insurance policy. It's a hedge against the scenarios where paper money loses meaning. History has shown us over and over again that no currency is truly permanent. Gold, on the other hand, keeps showing up. The fourth asset is I-bonds and treasury securities, and this one is perfect for the people in the room who are risk-averse and want something boring and safe, but still better than a regular savings account. I-bonds are issued by the U.S. government, so they're as close to zero risk as you can get. But here's what makes them special. The interest rate on I-bonds is tied to inflation. So when inflation goes up, your return goes up with it. You're literally protected from the thing that makes cash lose its value. Treasury securities work in a similar way. They're government-backed, they pay you interest, and they're considered some of the safest investments in the world. These aren't going to make you wildly rich, but that's not the point. The point is that they preserve what you've worked hard to earn, while still generating a return that keeps up with or beats inflation. They're the responsible, steady, quiet warrior in your financial lineup. The fifth asset is one that a lot of people overlook entirely, and that's investing in yourself and your income-generating skills. Now, I know that sounds a little abstract compared to stocks and gold and real estate, but stay with me. Your ability to earn money is an asset. Your brain, your skills, your knowledge, your expertise. These are assets. And unlike a bank account, nobody can inflate them away. Nobody can freeze them. And they tend to compound over time, just like financial investments do. Spending money on education, on courses, on books, on coaching, on developing a skill that increases your earning potential. The return on that investment can be extraordinary. Think about it this way. If learning a new skill or developing a new expertise adds even $10,000 or $20,000 to your annual income, that's a return that no savings account, no bond, no index fund is going to match in your early years. This is especially true for people early in their careers. Investing in yourself first, then investing your increased earnings into other assets. That's a wealth-building sequence that actually works. The sixth asset is business ownership or equity, and this is the big one. This is how most truly wealthy people build and maintain generational wealth. Owning a business or owning equity in a business, even a small stake, gives you something that cash in a bank will never give you. Ownership of something that can grow far beyond what you put in. Now, that doesn't have to mean starting a company from scratch tomorrow. Business ownership exists on a spectrum. It could be a side hustle that generates a few hundred extra dollars a month that you then funnel into investments. It could be buying into a franchise. It could be acquiring equity in a startup through employee stock options. It could even be creating a digital product, a course, an ebook, a YouTube channel like this one, that generates passive income over time. The underlying principle is the same across all of them. Instead of trading your time purely for a fixed salary, you're building something that generates value with or without your direct daily involvement. Cash in a bank grows at the speed of interest. A business can grow at the speed of ideas, effort, and markets. Now here's what I want you to take away from all of this. And this is the part that connects back to everything we talk about on this channel. Building wealth is a form of self-care. Protecting your financial future is a health decision. Because financial security gives you options. It gives you the option to choose a less stressful job, to take time off when you're burning out, to invest in better food, better medical care, better experiences. Financial stress, on the other hand, will age you faster than almost anything else. It disrupts your sleep. It spikes your cortisol. It shortens your life. I'm not being dramatic. The research backs this up overwhelmingly. So here's the challenge I want to give you today. Look at where your money is sitting right now. If the answer is, in a savings account earning almost nothing while inflation slowly eats it, I want you to start exploring just one of these 6 assets this week. Not all 6. Just one. Maybe it's opening a brokerage account and reading about index funds. Maybe it's looking up I-bonds. Maybe it's identifying one skill you want to invest in this year. Small steps, taken consistently, are what separate people who build wealth from people who just survive. If this video opened your eyes to something new, drop a comment below. I want to know which of these 6 assets you're most interested in exploring. And if you know someone who needs to hear this, share this video with them. Real health is holistic, and that includes your bank account. I'll see you in the next one.